How do you spot the exact moment a trend dies? Most traders try to guess the top, and they get crushed. But a reversal isn't random. It follows a specific structure, a specific story. In this video, we're breaking down the anatomy of a reversal. I'm going to show you how to read the shift in control step by step, so you can stop guessing and start trading the turn with confidence. Let's get into it. Before you can predict where the market is headed, you absolutely have to understand where it has been. Our first job is to figure out the story. Who was calling the shots before the shift? To do that, we need to look at the uptrend. Think of it like a staircase. Price steps up, making a new high, pulling back, and then making a higher high. When you see this pattern of higher highs and higher lows, you know the buyers are in complete control. It feels effortless. Every dip is bought up instantly. The sentiment is bullish, and traders are getting comfortable. Looking at our chart, that is exactly what was happening. It was a classic textbook uptrend. Buyers were firmly in the driver's seat, pushing price up to a new peak. But this is where the story changes. The market is a battlefield, and control can change hands in a heartbeat. Notice what happens at that new high. Buyer momentum fades. It's like a sprinter breaking a record and immediately collapsing. This hesitation is our first clue that the buying pressure is disappearing. The smart money is taking profit, and the amateur bulls are running out of energy. And then just look at the difference here. While the buyers are hesitating, the sellers see their chance. They don't just step in gently. They come in with overwhelming force. It is a strong, impulsive move down. And here is the hidden psychology behind this move. Think about the traders who bought the very top, hoping for a breakout. They are now trapped. They are underwater. As that impulsive move drops lower, their fear kicks in. They rush to close their losing trades. And when a buyer closes a position, they are effectively selling. This panic adds fuel to the fire, accelerating the drop. This aggressive takeover leads us to the single most important event in this sequence, the moment of truth that confirms power has shifted. We call this a break in market structure. Remember that staircase of higher lows? A break is when a powerful move smashes through that last step, the previous higher low. It violates the very pattern that defined the uptrend. You have to understand this. This isn't just a minor dip. A break like this is a massive signal flare. It is the market telling you loud and clear that the game has changed. This kind of structure shift is where traders either make money or lose it. That's why in my price action course, I teach why it happens, how to trade it, and how to manage your risk around it. The link is in the description and in the pinned comment below. Sellers have wrestled control away from buyers. But a quick technical note here. When we look for this break, we aren't looking for a wick. We need to see a candle body closing below that structural level. A wick is just a rejection. A close is a statement. It tells us the sellers are holding the ground. Okay, so we've spotted the shift. But a smart trader doesn't just chase the move. If you enter right at the break, your stop loss has to be huge, and that ruins your risk to reward. We wait for one final piece of the puzzle, confirmation. This is how we move from guessing to executing. The plan is simple. First, we let the price pull back to the level that was just broken. This is the retest. Price often acts like a rubber band. After a violent move down, it needs to snap back to verify the level. Second, we watch to see if sellers show up to defend this new territory. We want to see that old support has flipped into new resistance. Third, we look for a clear rejection. That moment of rejection is everything. When you see price starting to reject the level with conviction, that's your short entry trigger. This setup also gives you a clear line in the sand for risk. Your stop loss goes just above that retest level. If price breaks back above, the thesis is wrong, and we get out. But if it holds, the reward potential is massive. So let's recap. We identified the trend, spotted the momentum shift, waited for the structural break, and confirmed the retest. When you put all these pieces together, it paints a very clear picture. This is a high probability setup where the sellers have taken over and the path of least resistance is now to the downside. All that initial chaos suddenly makes perfect sense. And I really want this to sink in. Being able to see this specific pattern play out is one of the most fundamental skills in trading. Really understanding this flow is a game changer. If you enjoyed this video and learned something valuable today, make sure to hit that like button. Drop a comment below and let me know if you want to see more deep dives like this.